Welcome to the webinar on Kansas land values. We are coming to you from Manhattan, Kansas, where it's been a rainy, soggy day, but we welcome the rain. Today we're going to talk about Kansas land values, a little bit about the farm economy, and try to give you an idea of what's been going on in the sector and how that might be related to Kansas land values. So the first slide we're going to talk about is Kansas Farm Management Association data for the north central part of Kansas. These data are really very useful for figuring out what's been going on in the sector in terms of profitability on the crop side. So these are returns to wheat, corn, beans, and milo for the last 17 years. And what you can see from 2000 to 2006, 2007 in there is that the average returns to these crop enterprises has been in and around zero. And that means that some farmers are doing better and some farmers are doing worse, but on average we're at about zero profitability. And that's across all economic costs. So that's any returns over labor, machinery, land, so on and so forth. Then what you can see is that in 2008, profitability started to go way up, and that's when commodity prices went up, and we had an opportunity to really make some good money off of those four commodities. And you can see that that lasted until about 2013. And what was happening during that time was that land values were being bid up. When producers have money, they tend to bid it on land, whether it's buying it or renting it, and machinery is another area that they tend to spend their money on. But then starting in 2014, profitability fell off very dramatically, and that was with an increase in commodity prices, or with the decrease in commodity prices that was not offset by a corresponding decrease in cost of production. So profitability went negative. And so 2014, 2015, 2016, and 2017 have all been negative profitability. Even though these are commodity prices that we have seen before, they're similar to what we saw in the early 2000s, cost of production is much higher. And so we have now completed 4 years of negative profitability, and this really is going to have an impact on what we see going on in the land market. So just keep this slide in mind as we go forward through the rest of this presentation, and keeping in mind what's been going on in the sector. This is net farm and ranch income per operator. The green bars are for the dryland crop production, and during those good years from 2007, 2008 through 2013, we were making north of $130,000. In 2014, that first year of negative profitability on our crops, net farm income dropped in half, and then by 2015, it fell in half again and fell down to $5,500. In 2016, it rebounded a little bit to about $45,000 for the statewide number. That's a little deceiving because it's actually being driven by just one part of the state, which is southeast Kansas. So this takes that number, that $45,000 statewide net farm income number, and breaks it out across the different regions. And what you can see is that southeast Kansas did really well, whereas places like northwest Kansas, their net farm income was only about $300 for the whole year. The tricky part to this is that this is what the farmer is getting paid for the year. This is their salary. This is what their family is supposed to live off of. And it becomes very problematic when you're making $30,000 to $40,000 in some of these regions of the state. We're just going to set aside the fact that South Central Kansas and Northwest Kansas are basically at zero, and say, how are you going to cover your farm family living expenses? And those come in at an average of about $70,000. Now they've backed off a little bit since the run-up that we had from 2008 through 2014. But still, $70,000 is a lot of money to cover when you're only making $30,000 to $40,000, as we showed on this chart. So I'll go back. So the question becomes, how are farmers paying for family living expenses? And I've asked this question a couple different times of different audiences, and of course there is one of the common answers is, well, you get an off-farm job, and that's going to help cover family living expenses. If you've already got one, then yes, that's probably where you're getting most of your money to cover family living expenses. If you don't have an off-farm job, it's not exactly easy to go out and get one. And so what we've found is that people have been using depreciation dollars to cover family living expenses, and those depreciation dollars that's money that they're supposed to be setting aside to help to replace aged machinery as it ages out of the cohort. And if we're spending that money on family living expenses, then that means at some point we're going to have trouble replacing machinery. So it's not exactly a good situation. A lot of people make some comparisons to the 1980s. I've been tracking bankruptcies filed by Kansas farms over the last several years just to see if we're seeing any kind of an uptick. And we are. 2017 was the highest year we've had in quite some time at 25 bankruptcies filed. That's hardly a record breaker. I'll show you one more chart with regard to that, and you can see that back in 1987 we had 265 bankruptcies filed. So obviously 25 is not sounding any alarm bells, but what it is saying is that we are on a bit of an uptick from the last several years, and we want to think about which farms are the ones that are most susceptible to bankruptcies. Now, one of the things to keep in mind is that you don't go bankrupt after one bad year of income. You have to have several bad years and be in a precarious financial position to begin with for bankruptcy to become an option. But when we think about some of those farms and ranches that might be in a susceptible position, two things come to mind. One is the group that was in a very aggressive growth strategy from 2008 through 2013 that really was growing and picking up land based on the commodity prices that we were seeing, and then once commodity prices fell and profitability fell with it, is not going to be able to keep up on those land payments. The other group that's going to be susceptible to financial stress is going to be the young farmer and rancher. And those folks just simply tend to be a little more highly leveraged and tend to have a lot more rented ground than they do owned ground. And the thing about that is that if you own ground and you have a bad year, okay, so maybe you don't pay yourself rent. But if you are renting ground, you have to pay your landowner, you have to do that. And so what we find is that the older producers who own a lot more of their land are essentially subsidizing their rented land with their owned acres. And that doesn't work for young producers who have a majority rented ground. They don't have enough land that they own outright to subsidize those rented acres. And so what we're coming down to is a situation where when you look around and you look at the money that we have to work with and you look at where we are in terms of allocating that money, we are either paying ourselves for the machinery that we own or we're paying ourselves for the land that we own, but we're not likely to be paying ourselves for both. And that is just, it's been chipping away for the last 4 years, and it's been making life pretty difficult for folks, and that's going to filter down into the land market. So let's move on to the land value trends section. Now that we've kind of talked about that aspect of the economy, land values are definitely going to be affected by profitability in the sector. You're going to see upward trends when we have high levels of profitability, and you're going to see downward trends when we have a run of years that have low profitability. But they don't adjust as quickly as the profitability numbers do to changes in commodity prices, and that's because when it comes to buying land, we have some long-run expectations in mind, and those long-run expectations are, if I buy a piece of ground, I'm planning on farming it or grazing it for the next 30 years and then passing it on to my kids. I'm not planning on buying it now and selling it in 2 or 3 years when it appreciates. So we have a much longer horizon than just what's going on right now. But that being said, there are constraints that start to pop up when it comes to being in a period of low profitability. They're going to affect the land value and the ability of people to bid on ground. If you don't have the money, you're going to be looking to your lender to lend you the money that you would need to buy that ground, and they may be looking at your cash flow situation saying, no, that's not going to work. That's an important thing that they're looking at right now. And for folks that have cash on hand and want to maybe try and spend it on land right now, the question that they have to answer is whether or not they are going to hold on to that cash and help them get through an indeterminate number of years coming up that may be low profitability and help them with their cash flow situation, or do they want to spend it on land with the expectation that the cash flows are going to improve. So these are the things that are going on that might make it hard to bid on ground and cause, even in a long run expectations market, cause those land values to decline. Where do we get our information on land values? We have a couple different sources. I'll show you the one from Kansas Ag Stats, which is through the USDA. What they do is an annual survey. They used to do CRD level estimates, which was great because it helped us to see a little bit more of the diversity of ag land across the state, but they stopped doing that about 5 years ago. So now we only have a state value for the different cropland. So let's take a look at those numbers real quick. These are the 2017 numbers for cropland, which is the category includes both non-irrigated and irrigated. The majority is going to be non-irrigated though, having our statewide level at 1970, which is down 3.9%. The 2016 values were down about 7 or 8% from the year before. And then if we look at pasture land values, that's at 1280, and those are down 0.8%. They were also down about 7% last year. So you can see that we are down. It's interesting to look across the rest of the states and just kind of see where some of the decline is. There's quite a few states that are also seeing some slight declines, especially in the Great Plains, seeing some declines in cropland. But it's flat to slightly down in most states around the Great Plains and the Midwest. Here's Kansas land values over time, and what we see here is that run up from about 2008 through 2014, and then it starts to turn around and come back down, and that just fits very well with the profitability chart that we saw at the very beginning of the presentation. Now, how much of a fall off have we seen? According to USDA numbers, we're down about 13% for non-irrigated land. We're down about 13% for irrigated land, and we're down about 7.9% for pasture. Keeping in mind that pasture actually, cow prices were incredibly good in 2014, and so we were still bidding strong for pasture up through about 2015, and then things started to fall back off. So there's about a year's lag in the pasture side relative to the crop side. And then one more chart using USDA data. This is the rent to value ratio. So if I take the expected rent that I'm going to get off of this ground and divide it by that land value, it gives you a return off of that ground for the year. And what we've seen is that rental rates, USDA rental rates don't tend to change very much. And so as land values were going up, it was pushing that rent to value ratio down as low as about 3.5% for irrigated and 2.5% for non-irrigated. They've rebounded a bit with the push down in land values to where we're up to about 4.5% for irrigated and 3% for non-irrigated. And pasture tends to float between 1 and 2%. Anyway, it doesn't change that much, but there's a slight decline down to about 1.5%. Okay, so if USDA gets their prices from surveys, there is another source for land values that we can look to give us a slightly different estimate, and that's one that would be based off of actual market sales. And that is the one that I'm going to show you next, because we want to see if we can measure actual purchases of land and see if that's coming in close to the same estimates that we get when we survey people. The source for the Kansas land values, for the market market level data is the Property Valuation Department in Topeka. This is a collaboration between the Kansas Society of Farm Managers and Rural Appraisers and the PVD, and they provide the data to us here at K-State, and then we're able to do these kinds of estimates and these kinds of webinars so that folks can see what land values have been doing since this data isn't publicly available. Now, what I've got is sales data from 2013 through 2017. And in those data, I've got the location, the county in which the parcel was sold, which allows me to measure things like population density, and that matters when we're comparing a county like Sedgwick County to a county like Sherman County. We want to be able to account for the potential for developing that ground into non-ag uses. We know the size of the parcel. We know the mix of irrigated, non-irrigated, and pasture. So what my model does is it takes these mixed parcels and it tries to break out what the value of just the non-irrigated is and the value versus the value of pasture. It's a little bit tricky, but the model usually does a pretty good job of breaking out those categories. On the irrigated side, it's a little trickier simply because we have fewer irrigated parcels. But we can still break those out as much as possible. We also have things like the 20-year average rainfall, and we can account for the water holding capacity of the land. We also look at enrollment in CRP, which in some years has a negative impact on land values, and in other years actually has a positive impact on land values. It kind of depends on what the opportunity cost is for looking at the other, your other use for that land, which is farming it. And between the period of 2008 to 2014, it was so lucrative to be able to farm that CRP ground that it actually, being in CRP, had a negative impact on land values, whereas in periods of time where you're losing money on farming it and you'd rather have a fixed payment and not incur the costs, and that's where being enrolled in CRP can actually have a slightly positive impact on land values. We also take off the value of improvements so that we have a bare land value, and parcels under 40 acres are omitted. Okay, so let's take a real quick look at the summary statistics. The acres in sale is 150. 4.3% have CRP contracts on them, and we have an average of 25 sales per county across all the land categories. That total sales transaction number is wrong. I didn't add up all of my numbers, so I apologize for that. But you have 2017 numbers at 2,626, which is up slightly from 2016, but you can see both of those years are down pretty significantly from 2015 and 2014. So we've seen a 31% drop in sales over the last 4 years. And that's pretty interesting because 2016 was the first year where we heard a lot of people talking about no sales and ground going up for auction that just wasn't selling where the sellers thought it should be. And so there was a real softening of the market that is a little bit challenging for me to measure because it has to actually sell in order for it to make it into my model. But when I look at these downward numbers in terms of parcels actually going up for sale and selling, that tells me that there's a softening of demand in the land market. So that's just something interesting to keep in mind. When we look at the sales over the last couple of years, we're down. And we are down slightly from the previous year, and looks like we have down on non-irrigated about $300 an acre. We're down about $300 an acre on irrigated, and we're down about $400 an acre on pasture. And I found another mistake in my slides that 3,027 should be a lower average because it is definitely lower than 2016. So for 3 years in a row now, we've had a slight decline in land values, and I wouldn't call this sort of falling off the edge and the market is crashing. That's not at all what's going on. This is a very slow and steady decline that seems to be going on, and again, it's fitting very very tightly with where the profitability numbers are, and I would have to say that as long as those profitability numbers stay low, that we're going to continue to see this slow and steady correction in the land market. We'll give you some numbers here, non-irrigated land and how it's gone up and come back down over the last 5 years. Our total decline since the peak in 2014 is 25%. So we talked about anywhere from a 30 to 50% decline in our numbers a couple of years ago, and we're now at about a 25% decline. I would say that if we continue to have low commodity prices, that this is going to continue to slowly decline, and we'll continue to push towards that 30 to 50% range. On irrigated land, it's a little trickier to estimate, but what we have here is that according to the land sales that we do have to look at, an overall decline from 2015, but a slight increase to flat from 2016. So the 2016 to 2017 numbers are basically flat, but that's still a decline from the peak in 2015. And on pasture land, we're down about 17.8% from our peak in 2015. And again, this is just showing returns to grazing ground, and that the overall profitability in the ag sector has been declining. Take a real quick look at this number, and these numbers right here, as they vary across the state. One of the interesting things that's going on is that there are some parts of the state that are it's really clear what those numbers are. In other parts of the state, it's tough. I'll direct your attention to northeast Kansas and say that number is probably pretty low relative to most parcels that sell up there. But remember, that's a region-wide number, so it includes some ground in Pot County and Jackson County versus Donovan and Brown County. One of the things to keep in mind when I visit with people and talk to them about what land values are doing in their area, it's a very mixed bag. Some people will tell me, yeah, we've seen some declines in prices. We've even seen some ground going up for sale that we're pretty sure the bank, is asking them to put out. But there's other places where, and Northeast Kansas would be one of those places where the land values seem to be holding pretty well. So it's a mixed bag. Here's the pasture numbers, and I'll let you look at those for a moment. We'll have the county level numbers posted probably by the end of today on the Ag Manager website if you want to look at the county level numbers and get an idea of what's going on there. So just check back to Ag Manager if you're ready to look at those numbers. The last slide I'm going to show you is a long run growth curve. I've shown this slide before, but I just want to give people the opportunity to see it again and see how when you compare what's going on now to the 1980s, there's some similarities in terms of the way the land values are, how they went up and how they're coming back down. The run-up for that first bump that you see in the middle of the chart is the 1970s, and we had some good commodity prices during that period. We had some good profitability, and we had some pretty aggressive lending going on. And then when the commodity prices fell, things really, it got pretty dramatic. Think back, 1987 is basically the bottom of that land correction, so it's as far down as land prices went, and that would be when we saw those 260 some bankruptcies. So you had a bunch of land going on the market, and it really pushed down land values. Then you have a period of time where they're slowly increasing again, and then by about 2007 they start to really pick up, and they went up very fast, much faster, at a rate of growth that was much faster than they did even in the 70s. And so now to sort of ask yourself, well, how far are they going to come down? I charted a couple of different growth rates, the purple one being the old, slow, low growth rate. red one being the growth rate that gets you up to being at a really high level, and then the sort of in between. And what you see here is the green number is you'd have to fall by about 30% to get to that number. You'd have to fall by about 50% to get to the growth rate that is the long historic one. And what we've seen on USDA numbers, again, these are USDA numbers, is just a 9.8% decline overall in the growth rate. So all the numbers are pointing down. I believe the Iowa numbers came out about a month and a half ago. They were flat to slightly up, but we definitely are on a downward take. But I will say it again, it's not falling off a cliff. It's a slow and steady decline that appears to be a correction that is lined up pretty well with the profitability on the cropping sector. And so as long as those numbers that I showed you in at the very beginning of this presentation, as long as those values stay low, then I think that we are going to have land values continue to fall and continue to try to correct away from where they were on that big run up. I want to give everyone the opportunity. This is where the land values will be located, as well as the rental rate estimates and the pasture rental rate tool. So it's all on Ag Manager, which you're probably pretty familiar with. And now let's go. I think we want to look at the chat section and see if we've got any. Why do I got to be down on Jackson County land? David. All right. How about you guys ask some questions, and we will get to some of the things. Oh, I guess I did want to say one or two more things before I go to questions, but go ahead and start typing them if you want to. Something to keep in mind is that, people have asked me a couple of times, what do you see for the next couple of years? What do you see being important? And I think one of the things that really makes me nervous is a drought in large swaths of Kansas. And when we have a drought and the I states don't have a drought, the problem with that is that we don't have any crop to sell, but commodity prices don't necessarily do their hedging where they go up because there's so little crop to sell. So a drought here that isn't region-wide could be really problematic for us. I probably can't get out of this webinar without saying something about China and about saying something about what might happen if we have a trade war. All I'll say to that is that, China, if it's not going to buy soybeans and sorghum from us, it's going to look for other places to buy it, which will essentially just start disrupting trade flows. So we'll end up selling to whoever was buying those beans out of Argentina or out of Brazil, and it's not that we won't be able to sell our crop just because China has put tariffs on it, but we won't be sending it to the most efficient outcome, and so we will see some downward pressure on those prices. So a trade war is got some problems. It's got some it's got some things that could have some impact on us, definitely. So those drought and trade war are my X factors when it comes to where these land values are going to go and how things are going to happen. All right, let's start answering questions before I run out of time. On pasture, do you adjust for fence condition and or tree and brush infestation? And no, I don't, Mark. And the reason is because I don't have that information in the PVD data. But that's a really important aspect of what people are actually willing to pay for ground, is what condition the fences are in and whether or not you've lost quite a bit of grazing capability to tree and brush infestation. So great question, but no, I can't account for that. Do I know what share of Kansas farmers are filing for bankruptcy as opposed to total number? It's a very small share, only 25 relative to I don't know the total population of Kansas farmers, but it's still a very small share. Do I have any general comments on how landlords and renters, hold on. Let's see. Do you have Any general comments on how landlords and renters should approach rent negotiations over the next few years? That's a great question, and it's one that you probably won't like the answer, but the answer is we really have to be willing to renegotiate every year, because we've been in the habit of negotiating and fixing a rental rate, especially a cash rental rate, for 3 years or 4 years. And what's going to happen is that's going to get us in trouble really quickly, potentially on one side or the other. So we need to be talking to each other. You really need to be making your landlord aware of the financial situation that we're in, and sharing some numbers with them. This is not the time to basically get real close-knit with your numbers. It's really a good time to be sharing with them, where you're at and how you're doing with profitability, and how you can make things work. And this is also the time when having invested in that relationship in the past is going to help you with those negotiations. What explains the higher prices of dry land and pasture in western Kansas? Oh, good question, as opposed to northwest and southwest. I don't know. I've been working on these numbers for 2 weeks now, and I keep getting that answer, and I don't know if I've got a problem in the data or if it's actually what's going on. But West Central Kansas numbers are coming up high relative to the other parts of western Kansas, and so I think that just take it with a grain of salt. I don't have any anecdotal evidence that either supports or disputes it, but it makes me a little questioning whether or not those are the right numbers. Please comment on economies of scale as related to the decision to purchase land. I've had a perception, possibly incorrect, that KSU ag economists' opinions on economies of scale are not static. Well, the economies of scale question is, I'm going to assume what you mean is that you've got the base, the financial base and the land base that you can leverage in order to be able to buy land. And that's, I mean, we've all seen that. There's the folks that are big enough to be able to leverage themselves without being over leveraged, and use that big land base that they have in order to be able to bid a little bit more on ground and bid for that ground. And so, yeah, it matters. Economies of scale matters in pretty much everything we do as farmers, because we are in that highly competitive marketplace. That's pretty much all I'm going to say on that, which is just that, yeah, it matters. Yes, the 2017 numbers will be available this afternoon. What resources are available to help determine how much good hunting ground adds to land prices? Oh, I wish I had that information. That's tough information to come by. I think it's going to really depend on what part of the state you're in and how good the hunting actually is as to what it's going to do in terms of affecting land values. You can see some parcels that'll go for 20% more to 50% more just based on what their hunting capability is. But I can't measure that. So like I said, what I'm getting at is just looking at the ag land value. Okay, interest rates. Some economists would have mentioned interest rates several times by now. Okay, we'll talk about interest rates. What are they doing? They're going up slowly. And does that make a difference? Yes. It means that it's going to be more expensive to borrow, to buy land. It also means that just generally borrowing in general is going to get a little more expensive, which is going to adversely affect our bottom line. And I don't anticipate an interest rate hike like the one that we saw in the 80s, which I think really undermined a lot of people's borrowing situations. I see the Fed keeping it low and slow with regard to oh, sorry, I lost my train of thought. I shouldn't have looked at the next question. That interest rates have some impact on land values, but right now, I would say that until we see interest rates change unless they change pretty dramatically, I'm not too worried about the increase in interest rates having that much of an effect on land values. I'm looking way more at the profitability in the sector and saying that's the driving force, because farmers are the primary purchasers of farmland. And so what we have to do is look at farmers' ability to buy and farmers' ability to borrow. And that's who we really care about when it comes to driving the bulk of the land market. The only way that we see interest rates having a big impact on land values like they did in the 80s is that they skyrocket. People are unable to pay on their notes, and the bank forces them to sell ground. So it's a roundabout way of getting to the answer of your question, but I think that I'm not as worried about interest rates as I am about just overall profitability in the sector. Anecdotally, it seems that Flint Hills pasture land is going for significantly more than nearby non-Flint Hills land with the same feed value. What accounts for this? I don't know. That's interesting to know. Reputation effects. Size of the parcels. It might be that the Flint Hills ground is bigger pastures than the non-Flint Hills. So in terms of being able to rent larger parcels, that might be an issue. I don't know. Do you know let's see, any information or added value of wind turbines? No, I don't have any information on turbines. I don't have any information on hunting. And I don't have any information on oil and gas. Do you know what percentage of your sales data would be auction results versus traditional realtor versus private sales between individuals? Good question. I don't have that breakdown. I could look it up. I will write that down as a good one to put into future webinars, though. Thank you for that question. Sorry, I don't have an answer for you. For land appreciation, what time period do you think is the most accurate going forward? Crystal ball. Oh, I think I've crystal balled it enough today and basically said we are probably looking at another 3 to 5 years of land values correcting unless something really good happens with commodity prices. But I think we're still adjusting to the profitability that we've already experienced. And it's chatter, I know, but I'm hearing more and more about people putting ground up for sale that is, they're being asked to do that in order to get their borrowed money balance under control. And something else that we've noticed, I didn't mention this earlier, but I will mention it now, is that we've seen an increase in or a decrease in really high quality land being sold over the last 2 years and a slight increase in lower quality land being sold. And one of the explanations for that is that I think that if people are being asked to sell some ground by their banker, they're looking at their lowest quality ground first, and that's what they're looking to sell. And I think that's what's going on in the market right now. So we're keeping track of that, trying to see if that trend is going to continue, or if we're going to go back to regular inventories. But like I said, overall, the parcels that have sold are down over 30% over the last 3 years. So we really have seen some changes in the land market, and I think there's going to continue to be some volatility. There's going to continue to be definitely some regional differences. So what I say at the state level, like I said, may or may not have an impact on what you're doing or what you're seeing locally. This is the big trend, the big overall picture. So I know that there will be some differences in some localized land markets. Okay. I'll give you guys a chance to ask 1 or 2 more questions, and then we'll call it good. Yeah, the irrigated prices are being driven by water availability, which means well capacities. And That is really, really important for irrigated ground. I get so frustrated with my inability to do a good job of predicting where irrigated land values are going because they don't have good well data out of PVD. And we've tried to merge it with other data. We're still working on that. But I know that the wells, the well capacity, the depth to water, so on and so forth, all affect land values, and those are just really hard to get that information and put it into these models. So I always tell people on the irrigated land values, you just have to be a little bit careful that that you're going to basically take it with a grain of salt, that the irrigated values might be different than what I have, and it has everything to do with what kind of wells are on those parcels that are being put up for sale. Okay, do I see land being fallowed or abandoned due to lack of profitability? Well, that seems pretty extreme, and I don't think we've gotten to that point yet. I think that there's still a lot of people are grazing off wheat, grazing off some of their crops, putting on cover crops as opposed to grain crops, and using it for pasture. I think that's probably something that, if it's possible to do, people will do that before they fallow it. So I haven't heard about that happening yet. Are my slides for this presentation proprietary? Are they accessible to all of us? Nope, this is K-State information, so this is available to everyone. Rich sent out an email with them so you can print them off, and we'll also have them posted on the website this afternoon so that you can print those off. And if you have questions, please don't hesitate to email me. It's usually better than trying to call me, and I will get back to you as quickly as I can with your questions. Thank you for your questions today, by the way, and thank you for participating. Like I said, it's become kind of an annual thing, and it's something we look forward to doing, and I like getting your feedback and your questions.